Hi, Greg Lewis, Metastock Software. Hey, you're about to watch one of the great presentations from our recent Online Trader Summit. I know you're going to enjoy it. If you do not yet have Metastock, make sure you visit metastock.com/traders-summit 3-for-1 for a great 3-for-1 offer for Metastock plus market data. Also, make sure to listen to Jeff Gibby at the end of today's presentation. He has a really great offer. It's very exciting, and I know you're going to want to hear it. Finally, make sure to leave us some feedback. We always want to hear your feedback, and subscribe to our YouTube channel. Thank you so much, and successful trading.
Let's go ahead and talk a little bit about Rob Booker. Rob Booker is next. And Rob Booker is I'm going to say the same thing about everybody, right? Rob Booker is also a nice guy. You'll be happy to know that. He's going to be talking about using pivots and divergence setups to set up charts, find good trades, and how to plan your trades. And Rob's somebody that we've had in the room quite a bit. The things I like about Rob is that he'll go in and give a presentation to a couple hundred people wearing a Star Wars t-shirt. So let's go ahead and bring Rob in here. I'm going to go ahead and mute you. Oh, actually, you'll need to unmute yourself. I'm going to go ahead and make you the presenter, though, as well as we go.
All right.
All right, very good.
Sounds
I can
great.
hear you, Rob.
That's brilliant.
What do you want to say for yourself?
What do I want to say for myself? That's a pretty interesting
way to frame that question.
Yeah, exactly. What do I want to say for myself?
I used to keep it kind of boring and say, hey, what do you want to tell us about yourself? But it's a little edgier when you put it that way. So I can't see.
Not yet. I'm going to share my screen in just a second here. I'm just pulling it up now. I have a couple different ways that I can share this presentation, and here we go. So share. Let's see if this version comes up. Oh yeah, that's the present. There's the slide presentation version.
Here it comes. I got it.
All right. So happy to be here with everybody. Thanks. Thanks a million. Thanks, Jeff, for having me. I sat in for part of Oscar's, and I don't think I've ever heard him before, and that was great. And for $1, trying that out for 2 weeks, that's pretty awesome. Like, I don't really join people's chat rooms or anything like that, but I would totally do that for $1.
Yeah, and you'd be entertained the whole 2 weeks, I guarantee it.
That is amazing. Well, I really appreciate you having me here. So you want me just to let this rip? You ready?
I'm gonna, as I say, get out of the way.
All right. Okay. You're never in the way, but all right. Hey everybody, I'm super excited to be here with you. I'm here joining you from Arizona actually today on a little bit of a trip, and I'm actually presenting this from my iPad, which is really kind of, I didn't think that this would be possible, but it is. When all of this is over, I'd love to hear from you or stay in touch or whatever else. I'm always interested in hearing from you, and you can find me online anytime at robbooker.com. Now, before we get started, and I'm not going to spend a huge amount of time on prepping you or getting you ready for anything. This is all technical analysis coming up in just a moment. But I do want to say a couple of things. I'm not for everybody. So I don't love, I guess I can just be honest. I don't think you care if I'm just totally honest with you. I don't love trading. I don't love sitting in front of the screen. I don't love charting. I just like making a living. So I'm not addicted to the charts. I'd rather be doing other things. Trading is, to me, should be as simple as possible. And it's not a rant against anybody else. I'm not your guy if you're looking to hang out with somebody that can't ever get enough of the charts or the trading. I really just want to do things in the simplest way possible and the least amount of time. And I'm not going to say I'm lazy, because I'm not lazy. It's just that I don't want I don't want to spend a ton of time getting my trading work done. And the real turn after the first 15 years of trading, I massively simplified things and I stripped a lot off of my charts. After having managed money, after having traded the FX market for 15 years. And so about 3 years ago, I went through a major process of simplification. And so in this presentation, I want to talk to you about how I've simplified things, and I'd love to get to know you better. I don't care if you buy anything from me. I don't care about that. That's irrelevant. I'm happy to meet you. You can actually, I think I can do this correctly. Yeah, you can send me a text message anytime. You can send it to that number. I have a couple of numbers. You can also send a text to this number. And if you call me, a baby angel will lose its wings. So don't call me on the phone. I have zero interest in talking on the phone to anybody. But I would be thrilled to hear from you. If you want to text me, send a text, especially with the number on the top, because I'm traveling and I have that will go to every computer and every phone I have directly to me. If you have a question after this is all over, you want to say hi, you want to insult my intelligence, you can get in touch with somebody else. But if you have any questions, I'm always happy to hear from you. Whether or not you ever buy anything from me, I don't really care. I'm just happy to meet you. I've been a trader for 18 years. I started in the year 2000 after bankrupting a company that I started with my college friend. He fled the country, and I was left with about $150,000 in business debt and taxes. And then I got on the phone, back in the days where you had a phone like this, right? And I called up my friend Ron at Bear Stearns in San Francisco. And I said, I think I want to try to trade my way out of this mess. And so Ron said, whatever you do, don't trade Forex. It's too risky. And that's exactly what I did. I had a lot of really, really, really terrible experiences. I lost $50,000 on the Japanese yen in 2004 because I held on to a trade through intervention. I took a big loss in the, even 2010, I took like a $34,000 loss on the Swiss franc. And this was always because I traded too big and I made the same old mistakes that everybody else makes. And that is to say, I'm not better than anybody else. I'm not smarter than anybody else. Maybe I've had a few more years of experience than some, but I've built my own systems and built my own rules that have prevented me from repeating some of these mistakes over and over again. But I try to be really transparent, mostly about the negative, painful experiences, because that's where all of the learning comes from. I've managed money. I had a small $8 million fund that I traded as a commodities trading advisor until 2011. So I've done good and I've done bad, and in this presentation today I'd love to share with you some of the good and some of the bad. So if you're ready to go and you're ready to dive into the technical analysis, I am totally ready to go. So just give me a thumbs up or say hey or say hello, or just leave a comment in here and leave a like or a heart or a I don't know what they let you do these days inside of these presentations. Okay. I built an indicator years ago. Oh, look at that. That's really nice. I'm getting all these. This is fantastic. Thank you, everybody. Okay, here we go. Years ago, I built an indicator while sitting in a coffee shop in Knoxville, Tennessee. I drove across the country in 2013. And I used to do a radio show and a podcast. And on the show, I said, hey, I'm going to drive across the country. I'd like to stay at your house. And so I drove across the country and stayed at traders' houses and got to know them better. And I was sitting in Knoxville, Tennessee in 2013 in a coffee shop, the Old City Java coffee shop in Knoxville, Tennessee, and I was building an indicator. And I want to show you what this indicator is built from, and it is available as an add-on in Metastock. It's actually one of the more affordable add-on indicators in Metastock because my life certainly isn't going to change if you buy or don't buy the indicator, but I think your life might. And I try to share as much as I can for free as often as I can and try to make myself as accessible as possible. And anyway, so this is an add-on inside of Metastock, and that's what we're going to talk about today. So this indicator appears as small lines underneath price, your bars or candles, or on top of them. And in this example here, this Knoxville divergence, named because I was in Knoxville, Tennessee when I built this indicator or coded this up, what we see is price falling. That's number one. Price is dropping. It's just, that's, obvious. Now, it might be a long-term upward trend, but on this time frame chart, whether it's the 1 hour, 15-minute, 5-minute, I don't know, 240-minute, the 137.5-minute chart, whatever, I don't care. Regardless of that, price is falling. Maybe the uptrend is on a longer time frame chart, but on the short time frame chart, we're dropping. And then at the same time, the relative strength index, the momentum. The momentum indicator is rising. Oh, Joe. So it's rising. So price is falling and momentum is rising. And this is what's classically called divergence. Now, I don't think I deserve a Pulitzer Prize in technical analysis for telling you this. Like I said, I don't think I'm the smartest guy ever. Divergence is a dime a dozen. Divergence is like, listen, you could find divergence every second of every day if you want to. That doesn't make it special. What I layered on top of it after those two things have happened, so 1, price is falling, 2, momentum is rising, 3, the relative strength index has gone into oversold territory. So at the same time, here's all the things we have happening. Price is dropping, but momentum is rising. It's like price has fallen into the ocean. So here's some waves. Price falls into the waves, and then it's falling, but it's slowing down as it falls. And then it starts to come back up, especially if you have a bunch of air in your lungs. So price is falling, momentum is rising, and the relative strength index is oversold, which means it's really dipped into deep territory. Now, before I go any further, this isn't magical. I didn't build the world's most magical indicator. This just works for me, and it works really well for me. And this bullish Knoxville divergence is an early warning sign, not a guarantee, but an early warning sign that price is going to reverse and come back up. And that's really, really the basis for so much of what I do with trend trading or counter trend trading. In this example here, we're looking at Knoxville divergence again, and it's a red line on top of price. Price is rising, that's number 1, but the momentum indicator set to 21 is falling across that same period of time. And then the relative strength index set to 21 is overbought, rises above the 70 mark. So that's number 1, price is rising. Number 2, the momentum indicator is falling. And number 3, the relative strength index is overbought. So it's like if you're juggling and you're throwing a ball up in the air. So it starts down here and it travels up here, and the ball is higher, but it's moving slower. And in fact, the momentum is shifting directions, and the ball is going to fall down. So that's what this is. It's an early warning sign that the momentum has shifted, and although price is rising, it could begin to fall. Once again, there's nothing magical about it, but boy, oh boy, oh boy, if there is a longer-term downward trend, and then on the short-term chart, there's this bearish Knoxville divergence, it's super, super duper reliable for me, right? Not for everybody. And I'm not trying to get rich off of telling you this. I'm sharing it with you, and I'm just teaching you what goes into it. I've just told you how the recipe is made. So Let's look at some examples. The whole rest of this presentation, by the way, is just me showing you some examples of what this looks like and maybe adding a few cool things onto it. So this is an example. I'm going to do examples from the stock market and from the FX market. So if you trade stocks, that's great. You trade Forex, that's great. You trade, you sell drugs, that's great. We could chart it, I guess. We could chart the prices that you. Okay, we're not going to do that. Okie dokie. On the chart right here is a bullish Knoxville divergence or bullish KD, and it's green right here. It's a green line underneath price. It is a suggestion, not a guarantee, an early warning sign that price is going to reverse and come back up. This is the Euro Swiss franc, the Euro Schweizer Franken. And so it's the Euro Swiss franc, and it's an early warning sign that price is, bottomed out. It's bottomed out, and it's ready to turn. And the longer term trend could be up. So we have a long-term trend from a longer-term chart, like a daily chart, that says the trend is up, but we have been falling on the shorter-term chart, and we've produced a Knoxville divergence. That is a super powerful combination. It's a super combo. I love it. It's exactly the kind of thing that I'm looking for. It's exactly what I'm looking for. Now at the bottom here, we have the ADX, which is typically just a technical measure of trend strength. And the ADX, when dropping, means the trend is weak, meaning the movement down is the strength of that is dissipating, and the lower the ADX goes, the greater the likelihood is that we're going to get a nice move up. And that is the way I break down a chart. Now I'll tell you more about my routine as we go, but I want to show you more examples. And as I show you more examples, I think I'm going to answer questions that you might have along the way. So here is a bearish Knoxville divergence. It's a red line, bearish KD, a red line on top of the bars or the candles. Now I'm going to look at every single day I have a routine. And in my routine, I'm going to look at about 18 currency pairs. Currency trading for me is absolutely wonderful because I can trade a lot of size. You could trade a $100 account in FX, and I've traded an $8 million account when I was managing money, and my trades were always filled. Some people say, oh, well, the dealer in FX trades against you. Well, you know why that's glorious? Because when I traded 80 lots in FX back in 2012, 2013, all the way, I got instantaneous fills on that because they just took the other side of the trade. And some people say, well, your dealer is obviously, if they're filling your trade, they're working against you. Well, anybody that's on the other side of your trade is like, doesn't matter if it's a heavily regulated environment. So I love currency trading because I can trade a small account to big account, everything in between, and it's open, 24 hours a day. So what I have is 18 currency pairs that I'm watching on a regular basis. We'll get into time frame charts and whatever else later. And then I have a total universe of between 40 and 50 stocks that I like to watch. And we'll talk more about that in a bit. But what I'm looking for is I wake up in the morning, I open up the charts, and I'm going to look to see what has printed a divergence level. I'm going to look and see. And so this is the Euro Canadian. And I'm going to look to see that Euro Canadian. I'm going to say, okay, that's printed a bearish divergence. Here's what I'm going to do next. I'm going to draw a trend line underneath these two areas here. I'm going to check the ADX. Is the ADX low? This is you can look at a bunch of different. You can look at accumulation, distribution. You can look at all kinds of things. But if you ever pull up the ADX, I might look for an ADX under 20. And if it's got all of those things, And if it also shows that the long-term daily chart, for example, is bearish, I want to sell this. So I'll get a trend line underneath price, and I'll wait for price to break through that trend line, and I'll sell it. I may even set an order up to trade that automatically. So I just have the trade execute automatically on a break of support. And I'll just do that over and over and over again. I'll just cycle through all my charts. I'll have them ready to go. I'll have everything all prepared and ready to go. And I'm just going to wake up in the morning and look for my divergence. And then I'm going to look for a trend line. So here I might see bullish KD, bullish Knoxville divergence. And then I might draw a trend line across the tops of price, might buy it when we break above the trend line. I might place a stop loss below the lows, and I might stop out of this one. So this sell trade worked, this buy trade does not, and it's all good. So here's another example. Here's a good close-up example of what we're looking at. Here's the euro yen. We'll get into some stocks in just a minute. Wake up in the morning, I see bearish Knoxville divergence. That suggests to me that we're going to see a possible move lower, draw a trend line underneath price, sell it on the break of the trend line, take a modest, easy to reach profit target, and I'm done. And I'll do all of this by setting orders and then leaving. Just get out of the way. So I'm not going to mess with it, mess around with it, put a stop loss above the highs, and just go away and get out of the way of my trading. Just get out of the way. Here's a great example of what I'm talking about. Wake up in the morning, bearish Knoxville divergence. Now I'm going to look at the 1 hour chart most of the time, but I also really love the 4 hour charts because I don't have to sit in front of the charts all day long. I'm not playing a video game, I'm just looking long term. But I also look, if I want a day trade, I look at the 1 minute and the 5 minute charts. I guess you could even look at the tick charts if you wanted to get, completely out of your mind. Okay, so here we go. Bearish Knoxville divergence, draw a trend line, wait for the break of the trend line. Bada boom, bada bang, easy to reach, simple profit target at a previous area of support or resistance. Bada boom, bada bang, that's it. There we go. Here's a bullish one. Maybe I get up in the morning and this is what I see. Draw a trend line across the tops of price, wait for the line to break, look, that's an area of support. It becomes resistance, that's the target. Once again, waka, 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 as Fozzie the Bear would say. Let's just draw it again. Let's just do it again. Here we go. Wake up in the morning. Maybe I see one of those. Maybe it's already passed. Maybe it drew this at 6 a.m. and I'm getting out of bed a little bit late at 7 a.m. or 8 a.m. Fine. So I only get to the chart over here, draw my trend line on the chart across these two tops, wait for it. I just set an order above that trend line, buy it automatically, and then I place a profit target. There's a nice area of support. There's a nice area of support. I get a couple great profit targets in there. Stop loss underneath the lows, and that is what I do. Do you want to see more examples of how this is done? If you do, just put a like or a heart or just send an ESP, like just send a little message in your heart. I'll get it. I promise, I'll get it. Or don't forget, you can send me, remember, I told you this earlier, you could send me a question. You could say, Rob, I'm listening, and you're not making any sense, or that was glorious. You can text me at this number. If you call me at this number, a baby seal will get captured in the wild. So don't call me. I hate phone calls. But that's really me. It's not some other person. It's not the customer service line. There's not some guy named Frank that's going to pick up the phone. That's me. Like I'm here with that phone right now. I'd like to hear from you. So do it. Even test it out. Test it out while we're even here in the session. Say, hey Rob, I'm messaging you because I want to. That would be amazing. Okay, I'm even pulling that up on the phone. Okay. Here's another one. We're going to look at some stocks too, but let's look at another one of these. I'm really enjoying myself. I hope you're having a good time. This is the Canadian dollar, Japanese yen. I didn't know if you know this, but it's really highly correlated to oil. If you're an oil trader, you could actually look at moves in the Canadian dollar Japanese yen. The Canadian dollar Japanese yen will move first oftentimes, and then oil will move. It's because Japan is heavily dependent upon oil, and Canada, also known as Canada, is heavily supplied with oil, coconut oil, oil of Olay, all kinds of oil. Anyway, Canadian dollar Japanese yen. Bearish Knoxville divergence. So let's say I wake up in the morning. Let's say I wake up in the morning, and let's say I don't know what time frame chart this is, but it doesn't matter. I got all kinds of examples from all kinds of time frame charts here. Say I wake up in the morning, and I'm looking at the 1 hour chart, and overnight we printed a bearish Knoxville divergence. Draw a trend line underneath the price. Set an order to sell it on a break of that, and I look here at this previous area of resistance, and I put an easy to reach profit target. And then it's just automatic. I walk away, stop loss above the highs, I'm done. My rules of trading are this: trade small so that nothing I ever do can cause a significant amount of damage to my account. Number two, do what's easy, not what I wish I could do. So I just do what's easy. This is easy. Oh, Rob, that's not a very big profit target. Who cares? I'm not trying to look good. I'm trying to make money. Jim says, hey, Jim texted me. Hey, Jim, do you trade spot Forex, and which time frame do you focus on? I do trade spot Forex, and I trade the 1 hour charts. And Jim, you're awesome. Maybe that wasn't you in the webinar. See, somebody else is probably texting me. Okay, let's go to the next one. This is the Japanese yen, Chinese yuan. Seriously, didn't know that that was even a thing. So here's the Chinese currency. You could chart anything with this. That's bearish Knoxville divergence. Draw a trend line underneath price, sell it on a break below that, and look for previous areas of support and resistance as a target. Oh, look at this. It got getting a lot of messages. Thank you for your comment. Oh, you're welcome. Love you, man. Let's look at another one. Let's keep looking at these. We'll just blow through some technical analysis. Let's look at an example of one that doesn't work. Here's the euro pound. So I get up around 5:30 or 6 o'clock in the morning. I do some drugs. Just kidding. I don't really do drugs. I drink some coffee. I get ready for work. Get the peanut butter sandwich ready for my daughter before school and a banana. Get Drake, my son, out some yogurt and some toast for breakfast. Get my stuff ready to go. Go to the office. Get to the office around 6:30 or 7 a.m. Look at the charts, and let's say I find this bullish Knoxville divergence. It's an early warning sign, not a guarantee that price could go up. I draw a trend line across the tops of those bars or candles. I set an order to buy it automatically on a break above those levels. I put a stop loss, in some cases, we'll talk more about stops in a minute, below there, and then a target up here or right here or right here along a previous area of support or resistance. Now, where does trend trading fit into this, you might ask? So I'm interested in this trade. So if I'm on the 1 hour chart here, I'm really interested in this trade if the daily chart from left to right is moving up. So I've got a dip lower on the 1 hour chart and the daily trend is up. It's great. We don't know if this one worked or not. I just wanted to show you an example. Here's one that doesn't work. So let's say I wake up in the morning and the Australian dollar, New Zealand dollar has printed a bearish Knoxville divergence because it's red and it's on top of the candles. Let's say I draw a trend line underneath price, and let's say I sell on a break below that level, and I put a stop loss above the highs, and I'm stopped out. In this case, I've followed my rules, and then, so I get a smiley face. I've protected my trading account. I get a check mark. I get a smelly sticker. I don't know how to make the OK sign. Oh, look at that. And I make a little OK sign. And so I am, in that case, a happy boy. Okay, I got a bunch of you are texting me. This is great. Did you say Yanni or Laurel? Ha ha, I saw that actually. I saw that. Wasn't that like a news article or stuff recently? Hey, Rob, says the 678 area code. Enjoying your webinar. Can you explain the logic of bullish and the bearish line? I can't see the why of where it's drawn. Oh, were you not paying attention earlier on? Were you out smoking I'm not going to say the word, out in the parking lot before we started? Okay, for those of you that were smoking drugs before we got here, this bearish Knoxville divergence line exists because price is going up, but the momentum indicator at the same time was going down, and the relative strength index was overbought. And we showed a couple of charts at the beginning. So in the very same time that this was drawn, price was going up, the momentum indicator across these areas was going down. So price was going up, momentum was going down. There was a disagreement between price and momentum, like a ball thrown up in the air. It's going slower as it's rising. That's divergence. Disagreement between price and an oscillator. And at the same time, the relative strength index was overbought. So it draws the Knoxville divergence line there. I love you. It's okay that you were late. I know you weren't doing drugs. Let's give you another example and we'll answer the question again. This is bullish Knoxville divergence. Price is falling, and yet the momentum indicator was rising. So as price was falling, the enthusiasm for selling it was dissipating, and the relative strength index was oversold. Oh, now someone's probably mad at me for suggesting that someone, oh, I don't see those on current examples, so I get confused. 678 area code, I love you. I did not mean to make fun of you or anything. I'm here to answer your questions. I'm just trying to have a good time. The 900th time that you've described to this, you've got to add something in that makes you a little bit interested. Anyway, so I take all the stuff off the bottom of the screen in later examples because I built the indicator. It's got the built-in stuff, so you don't have to put those other indicators on the screen. Okay, this bullish Knoxville divergence means price was falling, momentum was rising, and the relative strength index reached into oversold territory. Draw a line on top of the candles. Square root of 21 in the rabbit is drawing around the hole, down that blah, blah, blah. We buy it, and then we look for previous areas of support or resistance. You want to make a lot of money? Yeah. Learn support and resistance. Buy technical analysis of stock trends. Worst book ever written. So boring. Ugh. But it's the Bible of support and resistance. Buy it, read it, love it. Also, you could buy Pring on price patterns. That's another great book about support and resistance. Chip is laughing. Chip, you're a good sport. Chip, if you've never read Pring on Price Patterns, Chip, you got my phone number here. You're texting me. Send me your full name or just a fake name. I don't care. Send me definitely send me a fake name, and send me your physical address. I will Amazon Prime you a copy of Pring on Price Patterns because you've been a good sport. I'll just buy it for you and ship it to you. I love you. I love you. I would kiss you on the charts right now if you were here in front of me. Okay, now this example stinks. Let's not look at that. Okay, here's Apple. You want to look at stocks? You want to look at some stocks? Okay, we'll look at some stocks. Here's Apple. Let's say that you like Apple long term. Apple, in your mind, is a long-term buy because the trend is up and because they have $12 trillion in the bank. Okay, great. You want to buy it on a 1 hour chart maybe, or a 4 hour chart, or a 2 hour chart because I wrote it wrong. Let's say you see bullish Knoxville divergence. So you draw a trend line across the tops of those bars or candles. You set an order to buy it, and then you set profit targets at levels, historical levels of support and resistance up above where you are now. Or, is what I do, I buy a call spread. I buy a call spread with a 30, 60-day expiration and a strike 1 to 2% higher than where I am now. And then I just let this thing burst to life. And then I just, if I want to trade options, that's what I do. Sometimes I'll just buy a straight up call. I'll just buy a call, and because long-term trend is up, it's a buy. Short-term divergence has appeared, and then I buy it. A lot of people who listen, I'm not going to say I'm better than anybody else. I'm do it simpler than anybody else. I don't even know if I do that. Who cares what other people do? I'm just saying, I ain't got no time for making this into a giant ordeal of like the square root of 72 and the delta theta is got a flux capacitor level of 26, and I got to build an arc reactor and put it in my chest before I can do whatever. Listen, Tony Stark built the first arc reactor in a cave with a box of scraps. And I try to do everything simple, same way, just box of scraps, scrappy. Stocks are a little bit different than Forex. Forex goes like this, up, down, up, down, up, down, up, always reversion to the mean. Oh, I love it. Stocks are a little bit different. If you see a bearish Knoxville divergence on Apple, you just walk away. You put your hand on your back pocket over your wallet and you back out of the room. You're selling Apple. You are serious. You have a problem, right? Because it's obviously going up. The trend is up. Let's say you're going to trade Tesla, maybe the world's least quality company as far as financials are concerned, but the world's most volatile technology-related stock. And let's say you're a real big fan of Tesla. You see these bullish Knoxville divergences. And let's say that it breaks above a trend line just barely, then falls lower. You stop out here. Let's say you see another one. You buy it a second time on a break of the trend line, and you let that thing rip. Give you a little bit. I'll give you a little. I'm going to tell you something that's worked really well for me for a long time. Knoxville divergence after earnings. Holy smoke balls. So what'll happen a lot of times after earnings, a really great stock will just get smoked, right? People will start panicking or whatever, but it's a really high quality stock, like Groupon. Just kidding. Or like Twitter. Just kidding, not really. But after earnings, it'll just get crushed, and then it'll drop and print Knoxville divergence on the 1 hour or the 4 hour. Oh, do I ever love that. This is glorious. It's just so awesome. And so I'll buy it. I'll buy a call, in those cases. A lot of times after earnings, a garbage stock, like, for example, Twitter is probably the world's worst. It's just a piece of garbage. Financially, I don't mind Twitter as a company or whatever, but after earnings, like a garbage stock will just get a huge boost, even though it's just the worst company ever with zero financials or whatever, and it'll get a really big boost. And then after earnings, you can just short it, which I'm not really big into shorting shares, but I do like buying puts. And you buy a put on it, and you give it, once again, you give it like a 30, 60-day expiration. You give it a strike that's 1, 2, 3% lower than where the stock is. Oh, it's just a glorious way to do it, because there's all this euphoria or panic after earnings, and then you take advantage of the fact that most people are just absolute, they're just gamblers. Yeah, so we're getting a lot of cool comments from the 214 area code. I like the concept of the Knoxville divergence at the bottoms of a trend. Usually try to avoid the channels and ranges. You may have something here. Thank you. I appreciate that. That's really a thoughtful, kind comment. 214 area code. That's awesome. Okay. Let's look at a couple more examples. Cause I love you. Chip says he goes by the name Chip, and he gave me his address. I'm gonna send you a copy of that book, Chip. Thanks for being in touch. I love hearing from all of you. I love it. Okay. Here we go. This is bullish Knoxville divergence. It's on. Oh, I love using Groupon as an example. Okay, here's Groupon. So Groupon after earnings, drops prints bullish Knoxville divergence, even though it's a terrible company, breaks through the level, and then it just goes bananas. It just goes bananas. And this is just to show you that I'm a dummy, right? Just because I don't like Groupon doesn't mean that investors don't like Groupon. Just because I've got some opinion about it doesn't mean it means anything. The only thing that matters is price. It's the only thing that matters. Number one, trade small, meaning reduce your trade size so you never risk blowing up your account. And then do what's easy. Do it easy. Okay, so here's a bearish Knoxville divergence on Groupon. And you could say, okay, well, I'm going to draw a trend line underneath price. So I have the KD, the Knoxville divergence, right here, but we don't break the trend line until right there. So I don't sell it until then. The purpose of the trend line is to keep you from jumping into the trade too soon. This is Google. So, only complete maniacs, right? Only a complete maniac sells Google. I mean, eventually, only a total, complete, it just would be the worst decision ever. So you ignore sells on stocks that are just inside of a savage upward trend. You would just avoid it. Or you could ignore it with your money, and you could buy it when the Knoxville divergence line, this level here is broken on the upward level. You could buy it. And that's a trend momentum play, meaning buy it on a break higher, especially if it's a really high quality financial instrument that you really like. This is, I don't even know what this is. What the heck is this? CM, let's just look it up. CMCSA? Let's see what it is. Oh, it's Comcast. I knew that already. Sorry. Sometimes you forget, right? Oh, I could have looked right here. Duh. Okay. Comcast. Okay, so you see bearish divergence on Comcast. Draw a trend line underneath price, and you only sell it when it breaks the trend line, and then it stops out. That's an example of one that doesn't work. I'm loving hearing from so many of you by text message. This is really cool. I'll give you the number again, and you can. What's the price of your Knoxville divergence? What's the price of my Knoxville divergence? You can get it for the low, low price of $9,000. Just kidding. Okay. Here is Amgen. Bullish Knoxville divergence. Breaks the trend line. It rises nicely. That's not a lot. Like, let's just see, this is 57, and it rises as high as 66. I'm no genius, but that's like that's better than 10% from April 9th to the 30th. A 20-day 10%. I mean, that's fantastic. This is Qualcomm. Bullish Knoxville divergence. So, this doesn't fail. You didn't buy it because it didn't break a trend line. The whole purpose of the trend line is to keep you from buying things before it's ready. You buy it on the breakout, has a nice move. It goes from 49.5 to 51. Not a lot. Not a big move. We would expect this to be going higher. It's probably a very short-term chart. This is Bank of America. By now, I'm going to give you a minute. I'm going to give you just a moment, and you can think about it. Look at the chart here and plan the trade. Do, 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 do. Bum, 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 bum. Okay, here we go. Ding. Bearish Knoxville divergence. Draw a trend line underneath price. Sell it on the break. Look for areas of support and resistance. And there you go, from 32 to 29. Not a big move. 10%, $3 move on a $32 stock. That's not bad. Here's ExxonMobil. A couple other things to look out for. This is a Knoxville divergence right before earnings. It's before earnings. What we really want are the ones after earnings. So this one, you might buy it and then get torqued. So we don't want to do that. So we don't want to. All right, let's do. Oh, look at this. Let's have a little conversation. I want to review a couple things that are really important to me. Like a couple things that have really made a big difference to me. Once again, I've got this phone sitting in front of me right now this weekend. So you can text me here if you have a question, 949-639-9169. Doesn't go to our customer support team. That goes to me. It's my phone. I have two phones. I have a couple numbers. But I have this with me. I will answer your text unless you're a jerk. Then I won't answer your text. Then I'll just wish a pox upon all your people. Number two, remember, trade small. What this means is trade small position sizes so that if something goes wrong, it never matters. That's the most important thing that you can do. I have a long, like if you go to youtube.com/Rob Booker, you'll see some recent free sessions where I really go off on this concept big time. Might bore you to death. I don't care. Next, do what's easy. I just see time and time again traders who find something that works and that they can figure out how to do, but it's just not complicated enough to keep their interest. And this is what I do. It's what I've been doing now for 4-5 years. I just don't do anything else. I just do what's easy. And then last of all, personal responsibility. Everything that happens in my trading account is 100% my responsibility. It's my fault. It's up to me to change. And it's like I call it not trading psychology, but trading philosophy. That you have this attitude that no matter what happens, I'm gonna be successful. I know there's gonna be obstacles along the way, but these three things have made a lot of difference to me, and I just appreciate you giving me the chance to sort of riff on those concepts. Got a couple more messages here. Hi, Rob, is the indicator available on other platforms? Yeah, we're here with Metastock today, though, so let's just talk about that. I love these guys. Oh, Rick from Oahu is here. Okay, so some of you are saying, what about pivots? Yeah, I've got a ton of stuff on my YouTube channel about pivots. I simplified my presentation today, but if you go to my YouTube channel, you'll get a lot. You could just watch a ton of stuff, including a bunch of stuff about pivots as well on the YouTube channel. And I apologize if that's what you were expecting to hear today. I kind of simplified my presentation to show you what I'm really doing right now with my money, as opposed to theoretical stuff that you could do maybe. Last of all, I do have further training and stories of traders that I've taught who are making between $100 a day and $1,000 a day. In some cases, taking a lot of risk, a ton of risk, and doing 1,000 or more a day. And in some cases, less risk and making $50, $100, $200 a day or whatever. And I want to tell you some of those stories. And if you go to robbooker.com, you'll see a presentation. You can register for it. You can take this a step further. I'd be thrilled if you did. And you can always find me there at robbooker.com. And of course, I'm always happy to hear from you. 305 area code of getting a text message. Love the simplicity of today's method. That's really nice. 716 area code. Hello, Rob. Thanks for your presentation. Well, thanks for being here. Everybody have a good time. If you did, leave a like, leave a thing. Tell Jeff it was good. If you hated it, my name is, no, I'm just going to give somebody else's name. If you love this presentation, it's Rob Booker. If you didn't like this presentation, my name is Warren Buffett. I am coming to Chicago. Yes, I'm going to speak at the CBOE, and then they're going to throw me out on my ear. My friend Mark Sebastian is doing an event at the CBO. He asked me to speak there. I keep sending emails about it, so if you don't know about it, you can get an email from me, and you'll see more information about it. Jeff, that's all I got, buddy. I'm grateful for you having me on today. Thanks everybody for joining me. I hope you had a good time. I hope to hear from you. I hope you'll stay in touch. And congratulations to our friend Chip, who won a book.
Rob,
Yes.
I have a question for you. I promised to ask because apparently CB won't text. But he wanted to know if you'd mention the books that you were talking about again.
Oh, yeah. Here are some of my favorite books. Here we go. I'll tell you what I wrote. I wrote Adventures of a Currency Trader. Okay, so that's my book. Technical Analysis of Stock Trends. That's by Edwards and McGee. This book is so boring. Yeah, it's not good. Not a well-written book, but it's like the Bible of support and resistance. Pring on Price Patterns. That's what I'm going to send to Chip. That's a great book. That's Martin Pring's. Yeah, that's Martin Pring's good book. Also, there's a couple other books that you probably don't care about or whatever, but there's a book called The Guide to Rational Living, which is a book about how we all kind of fool ourselves and how we all are not rational. Most of us make emotional decisions, but then use logic to try to layer on top of it rational decision making. But the more rational you are, the better trader you will be. You could also just, instead of that book, you could read Thinking Fast and Slow. That is also a fantastic book about the way that we think. Most of you don't care about those, but I think those are required. If you really want to be successful, you got to think about how to train yourself to think more rationally. 208 area code says, I really like the way you teach. Your way isn't so confusing. I love you. I try to keep it simple. I'm very transparent about my successes and failures too. So it's simple, but it's still, I'm still trying to make money just like everybody else. 678, woohoo, I enjoyed it. 214, your approach was simple. Thanks so much. Okay, thanks for the 404. I don't know who these people are, but I really appreciate you chiming in. Jeff, anything else?
No, thanks for the presentation. I was very, very nervous when you said you're going to try it on a tablet.
Yeah, it's iPad. This is an iPad Pro. It worked okay.
Yeah. For those of you that are watching, if you're having audio issues, we'd recommend that you not use a tablet. But
yeah, right, exactly.
In any case, thanks for coming in, Rob. Appreciate it. Great job.
Thanks, Jeff.
Do you
Thanks,
have a
everyone. I'll
specific-
talk to you. Oh,
One
yeah,
more.
go ahead. What?
CB says there's several versions of tech analysis of stock trends. Which one?
Oh, so I have the 8th and the 9th, and I think they're both fine.
Okay. I just go with the latest one, CB.
Yeah, find
All right.
yeah, get the latest one or the cheapest one that you can buy used. That would be fine too.
Very good. Very good.
Yeah.
Thanks, Rob. Enjoy the rest of your weekend. Thanks for spending an hour with us.
All right, have the best Saturday ever. Bye, everyone.
All right. Very good. I'm going to go ahead and get switched over here. Make myself the presenter. That was Rob Bicker, as you know. I just want to make sure you guys can hear me. I hope you guys are enjoying the presenters today. We've had some colorful ones on, and always fun. Always fun. These are my favorite days. let's go ahead and advance the slide. I just want to show you how this works. Again, it's a very simple method. Ran a little bit of a scan today. Here you've got, it's automatically going to plot the divergence levels for you. I'm going to show you exactly how to run this scan too, because we have a minute, and that's all it really takes. But you'll see right here, it's just going to plot the levels on you. If there's anything historic, it should also plot those. A question came in earlier, can I use this on the Dow or the S&P or some specific instruments like that? You'll notice on this one, this is DRIP, this is Drexen Daily, or Drexen something something S&P. And I assume it's an ETF, but if we even look at the whole history of this stock, it's only happened once. So I wanted to kind of just reiterate, you really want to scan for these divergence patterns. If I just threw it on a Dow chart, you're probably not going to find anything. You need to scan for it. And the way that works, just come into the Power Console, click on the Explore tab. That's our name for scanning, is exploring. You've got a Knoxville divergence one right here. I'll go ahead and scan it against my pre-filtered list. As we've talked about all day, you can use just about anything you want, whether you're in Asia or Europe or North America. It doesn't matter what market you want. It's Reuters. You're going to have it. Unless that market that you want is the what was it? Jamaican Stock Exchange. We don't have that one. We have just about everything else. So I selected the scan. I'll do it against that list that I've already filtered through. And apparently I'm looking at the report already because I can't click the go button. Where is the report? Okay, so I've got it somewhere over here. Go ahead and close this. I have a few windows open, and I'm pretty sure that that's what's causing it. Okay, I've got this selected. I've got the pre-filtered list selected. I cannot, I should be able to click this button, and I assume I just have the report open somewhere. So we won't run it. It did only take a couple minutes to run. Here we've got Drexen. It came in as a long divergence. Here we've got a couple short divergences. Very, very simple pattern. Very, very easy to go through and run the scan and find it. Very, very good. So Bill says, thank Jeff, excellent day-long presentation. Thank you. I haven't done any of the heavy lifting. I'm just here to kind of keep everything moving slowly. Casey says, definitely enjoying today. Thank you. CB says, can you use all your scan choices with a subscription to Metastock? Yeah, absolutely. Now, one of the things that they added in the scanner that I really like, if you're using Metastock for a while, you'll notice you'll know we recently had an upgrade. The upgrade has the new favorites functionality. So the scans that I run every day are going to be in this favorites folder. Okay, and if you just want to run all of them, you can just put a little bit of a check mark here. It'll run all 23 of these and just start through. Again, I don't know why this button's grayed out, but I'll figure that out later. So yeah, you can run all of the scans that you want with one subscription to Metastock. So thanks for the question, CB. Appreciate the interest. For Rob Booker's Knoxville Divergence, it's normally only $99 as a one-time cost. You can get it today at $49. And if you liked it, if you were interested by it, just give us a call, 800-882-3040, or visit us at metastock.com/sales-chat. So it is part of the Trader's Toolbox. We've had Steve Bigelow, his award-winning add-on first thing this morning, followed by Veracity, Top Dog Trader, Rick Sadler, and then Rob Booker. You can get all 5 of those add-ons for $19.36. Normally that would cost you $29.42. But we're also going to throw in 2 years of stocks and commodities, 3 months of access to Metastock Real-Time, 3 months of access to Metastock Zenith, and unleash the power of Metastock. So the only thing that we're not including is any real-time exchanges. And the sales guys can talk to you a little bit more about that, depending on what markets and what exchanges. All of the exchanges have their own special fees. So if you want to actually get real-time, there's some fees that you'll pay on top of that on a monthly basis. For the stocks, they're not that much. It's like I think it's like $3 for New York Stock Exchange, NASDAQ, and Amex, about maybe $9 for options. The futures can get a little bit more pricey, but give us a call, 800-882-3040. You can visit us online at metastock.com/sellchat to take advantage of that. Want to say thank you to everybody that's already done that. Really appreciate it. Keep in mind, we do offer this on a 30-day money-back guarantee for everything but the data costs. So give it a go, and you're not going to get a deal like that for a while. Do want to thank our sponsor today, Stocks and Commodities. 17,000 articles that they've done, million subscribers, great magazine. Get your free issue if you haven't already. It's a good opportunity to do it. I'll paste the link back in there in a minute. And